Are you currently working or you own a business and you're making all this money but don't know how to save or invest? This video is for you. You'll be glad you saw this video. In this video, we'll be covering what to invest in, how to invest, what you need to know before investing. So before we proceed, there are two things you need to know, and they are diversification and compounding. Diversification is the key to any investment. Don't put your eggs in one basket. Basically, that is what it means. Even if a particular investment is giving a very high return, it is never advisable for you to put all your money in that business, because you never can tell. Put some money here, put some money there, in case this one goes bad, this one will not go bad. We are praying no one goes bad, but you know what I mean. Compounding is about time. Time is very important. If you put a particular amount of money in a business for a short while, you get a small return. If you leave the money in that business for a long time, you tend to get more returns. So that is basically what compounding is all about. The longer the money is in the business, or the longer you invest, the more returns you get. So I'm going to give you 6 ways you can invest your money. Yes, 6 ways you can invest your money. The number 1 is stock. Yes, you can invest in stocks, or what we call shares. You buy a unit of stock, means you own a percentage or a portion of a company. If you buy 300 units of Transcorp stock, that means you own a certain percentage in the company, and when they pay dividend, you tend to get dividend. And when the stock price goes up, your money goes up. When the stock price goes down, your money goes down. So stock is very volatile. It tends to go up and down rather. So if you have very high risk appetite, you can go for stocks. However, stock is the best way to build wealth over time, because it's the best way for an average man to actually become wealthy. Beginning of last year, 2023, Transcorp shares was very low. At the end of the year, Transcorp was doing very well. So people that bought like 1,000 units of Transcorp in January 2023, they were balling in December. Dangote Sugar is also doing well. Dan Sugar. There are so many companies that are doing well. If you want to know this information, you can easily Google NGX or Nigerian Stock Exchange. You see the companies that are doing well, or you see the share prices of companies. Also, you can listen to business parts of news. You tend to see the portion or companies that are doing well, the companies that are not doing too well. It's always there when you listen to news, not hidden. Or you just need to be able to do your research to know which company to invest in and which company not to invest in. Do your research, because it's very important. If a particular company share or stock is not doing very well and you buy it, you may lose your money because the prices will go down. But you can easily become wealthy if you buy the right shares. So if you have a very high risk appetite, yes, you can go for shares. Like I said, diversification is the key. Another thing I need to talk about is portfolio. You need to build a good or a wise portfolio. Having different investments all together forms a portfolio. So you can have a portfolio of shares. That means you can have Dangote Sugar, you can have Transcorp, you can have Tesla, you can have, different shares, and you don't have to limit yourself to Nigerian stocks alone. You can also buy US stocks, and you can buy that on different fintech apps. You can use Optimus. There's this app called Optimus, and you can use it to buy shares abroad. Yes, so you don't have to limit yourself to just Nigerian shares that goes up and down. You can also buy US shares, but you know what the dollar is right now, so your money is talking, but it's a very good way to invest your money. Or the second thing you can invest in, ETFs or mutual funds. ETFs are exchange traded fund or exchange trade funds and mutual fund. What it is, it's more like stock, but in this case, you're not buying just the stock of one company. For example, there is a package that covers like 500 companies. When you buy that, it's like they are apportioning your money to all the 500 companies. So when one goes up and the other one goes down, you're not really affected because you have a piece of each of the 500 companies. I don't know if I'm explaining this well. I'm trying to explain it in a way that anybody can understand. The next one is mutual funds. So mutual fund is like pooling investors' money together to acquire a particular portfolio or other investment. It's more like fixed income. So with this, you have for fixed income, you have a fixed rate or a fixed interest rate, for example, 16% per annum, and then that that your money is secured. It's not like stock that you may lose your money and you may gain. So for fixed income, your capital is preserved. So the next one is bonds. For bonds are loans to companies or government. So, and there are different types of bonds. We have the corporate bonds where you loan money to companies and you're issued a certificate. We have the municipal bond where you loan money to local or state governments. And lastly, we have the treasury bills or treasury bonds where you loan money to the federal government. And the last time I checked, I think the rate was about 11% to loan money to the government. So when you buy treasury bill, the government gives you a certificate, you give your money to the government. At the end of the day, after the tenure expires, they pay you your money with a certain amount of interest depending on the rate of the investment. The fifth investment option you have is high yield savings account. We all know the regular banks do not give very good interest rates. If you put 100,000 naira in your bank account for a year, at the end of the year, you will not get 100,000 naira back because of all the deductions and interest you'll be charged, but they don't really pay you a good percentage of interest. So the best thing to do is to look for a high yielding savings account. For example, Optimus does one that they give you a very good rate at the end of the day. It's like using this fintech app. Yes, saving your money in fintech apps actually helps because unlike the regular banks, the interest rates, they don't really charge you those interest rates that they keep deducting, account maintenance fee, card maintenance fee, and all of that. They don't charge that in all these fintech platforms. So we have PiggyVest, we have Optimus. There are so many fintech apps these days. So those fintech savings platform or fintech savings accounts are actually high yield savings accounts compared to the regular savings accounts we have in our commercial banks. So doing that is more preferable. So it's very easy to use the app. You just go on the app, you register, you transfer money from your regular savings account to the fintech savings account, and then your interest starts to accumulate. You don't have to go to the bank and fill a form and all of that. You can easily do that, verify your account on the platform. The sixth investment option I'll be talking about today is real estate. Yes, not the regular real estate, Of course, rental income is very good. When I mean rental income, I mean actually buying a property, getting clients or rather tenants in the property, and then they pay you a certain amount of money at the end of the year or biannually as rent. That's rental income. That is very good, but not everybody have the money to buy an entire property. So the better part of real estate is what we called real estate investment trust, REIT. These ones are way better. These are publicly traded. They are also traded on the stock exchange market. It's just like stock, okay? But instead of buying a portion of a company, now you're buying a portion of a property, or you're buying 500 units of a particular property. So it's more like joint ownership. So you see a house, that house, if it's a real estate investment trust, so many people will put money together to buy several units of that particular property, and then when tenants are in that house, they pay their rent. The rent is being shared among, or more like a dividend shared among all the people that paid for that house. A diversified portfolio is the wisest portfolio. So instead of having all your money in one particular investment, it is better to have several investments, both high risks and low risks, so that you can benefit from different sorts of investment. So when one goes down, it doesn't affect you completely. So for you to determine the sort of investment to go for, it would depend on your risk tolerance. So some people have high risk appetite. They can take risks, they can put all their money and just go for it, while others are very skeptical. So your risk tolerance will most likely depend on your age. If you are a young person like me, you probably have a high risk tolerance. You'll be able to take risks, put your money in different portfolio. But if you are way old, you may not have a high risk appetite. You can make a lot of money from stock, but they are not completely risk free. There are a lot of risks attached to them. They can fluctuate drastically. When I mean drastically, they can fluctuate drastically. For people that bought Transcorp in 2023, they did not expect the money to go like that. They just bought the shares, but it turned out well. And there are some companies, people that bought some other shares, and the shares didn't do well for them as well. In my next video, I'll be talking about how to actually go about this investment. This video is giving you a general overview of all the different investment options available to you. The next video will delve more into how to go about this investment, how to actually get this information, how to make wise investment decisions. Let me know in the comment section if you like this sort of content, or if you're enjoying this sort of content, or would you prefer my formal content. Well, a diversified portfolio would be good, so we can do a mix of both. I don't really mind. Just let me know your thoughts in the comment section down below. Are you currently investing? What are you investing in? What platform are you using? What sort of investment do you think will be wise? Let's talk about it in the comment section down below. Share this video with your friends. Share this video with somebody you think needs this information. Like the video, subscribe to my channel if you are not yet subscribed. Thank you for watching. I'll see you in my next video. Bye.